Hey everyone, Steve here from theturtlefollower.com, and this is a stock market outlook video for the week of Saturday, March 7th, 2015. Ultimately, wasn't the best end of the week. If we look here at the ES, you could see we pretty much had a complete and utter breakdown on what was, to me, good news. We had some good news out of the payroll report. Apple was joining the Dow. I thought there was a lot of good reason to rally higher, and ultimately that didn't happen. So the little rally that we did have on Thursday was quickly taken back. We broke some key support areas as far as the 2087 that we were trying to hold above, which was the highs from back here at the end of December. All right, so we broke that level, and now we're kind of moving down. You could see volume was much higher than it has been in the past. So this was definitely, a key point that now we're going to have to try and see where we go from here. Now, as far as looking forward, obviously what happened Friday has happened. Just it is what it is type of thing. So now we have to kind of determine where and when we should see some support. And honestly, the way I'm looking at this is it's not really too far off. All right, if we look at this as if it was any other stock, forget that it's the market, forget whatever. All right, we're going to look at old support or old resistance becoming new support. And what that means is parts that, areas that held us back previously should now support us. And if everything is right in the world, that's how we should proceed. So looking at where we actually broke out from, let's look at this consolidation that we've talked about in the past and what we eventually broke out from right here at this 2058. Now, if you look and we zoom in on that 2058 area, you'll see that the 50-day moving average is basically right there as well. So in my mind, going forward now, we should come back. We'll probably see a little bit more of a sell-off starting Monday. All right, and then if everything is right in the world, we should see ourselves hit this 2058 and start to bounce. Now, whether that becomes the point where we go forward or not, that all is determined by if we eventually break out from 2115. So again, for the S&P 500 futures, I'm looking at coming down a few more points, right to this 2058, bouncing from there. If we can get back into this 2087 area, then that would be ideal. All right, that's half back, essentially, halfway back into this bar. And if we can stay up there, then I think we have a good chance of rallying higher. Now, again, volume was higher on Friday, right? Not the best situation, but I do think in the S&P 500, we have some good support right below us that should lead us to eventually at least holding this level and hopefully moving higher. So first key point is let's hold 2058. All right, let's look at the Nasdaq /NQ. All right, now this one is completely different, right? This one is, while we did break down on higher volume, all right, we're nowhere even near these support areas. So the Nasdaq by and far is much stronger than the S&P was. All right, you could see all these levels here that we had to get through. This 43.38, 43.15, 42.86. Those are all levels that I think can easily support us moving forward. My money right now would be on this 42.86 because that's the closest to the 50-day moving average. But again, similar situation where, yes, it was a sell-off. We did rally off the lows a bit, but ultimately we're talking about being within, let's see, we closed at 44.10 and the high was 44.83. So we're talking about being within just about 2% of the all-time highs. All right, so it's not like we're down here and we have to rally 10% just to get back to the highs. We could pretty much fill in the rest of this box and still be just fine. All right, so going forward, I still think maybe the Nasdaq, maybe if we can get some consolidation, stay above this 43.38. I think that would be key. If we start to break these 43.38, 43.15 areas, then we really need to see this 42.86 hold and see that 50-day moving average hold. Because if the 50-day moving average doesn't hold, well, then we're kind of at a point where the markets really are just going to continue lower. All right, traders like to use this 50-day moving average as a gauge, especially for the shorter term durations. All right, so if we don't stay above that 42.86 or the 50-day moving average, then I think we have issues. Now, as far as looking at volume, you can see this whole week volume basically increased. All right, so we did a market video on the 27th was our last one. So we had one good day and then basically 4 days that just continued lower. But you could see these tails that came in almost every day. So these aren't like big sell-off days like we saw back in here. All right, these are just days that while it doesn't feel great when you're in it, ultimately it's just kind of part of the process. So again, if we can stay in this box on the Nasdaq, I think that's ideal moving forward. Let's look at the Dow. All right, now the Dow is similar situation to the S&P. All right, basically almost identical, right? We basically held, or we were trying to hold above 18,000. All right, that didn't happen. We had a big volume sell-off on Friday. All right, but you could see 50-day moving average is right there. We held the support level at 17,828. All right, and you can see that level 1, 2, 3 times was resistance. So now one time it was support, and we're hoping that 2 times is support. So for the Dow, again, if we break down, I would expect to see a quick snap back and a move higher. Ultimately, we want to go ahead and see if we can start holding these levels. And again, maybe this is just one big consolidation where we consolidate between 18,250 and 17,850. But again, Dow is very similar to the S&P. First thing we need to do is stop the bleeding and stay above that 50-day moving average and stay above 17,828. Now, it's very possible that during the day we may get a little exploration down below these levels, but I would expect it to see a close above these levels. All right, that would be what I would be expecting to see if this market really is being controlled by the bulls and the bulls are trying to take control back from the bears. So that would be exactly what I would expect. I would expect some kind of exhaustion selling where you kind of get a move down here, maybe a little bit of a hammer, and then you close back above the 17,820 area. And the last one that we're going to look at, the Russell, as always, is very similar, all right, to the Nasdaq. We're basically testing this 1218 area, which has been support. All right, you can see it's supported here on 220, it's supported again here on the 6th. It was resistance. All right, these highs from back here, the end of December, and ultimately your trend lines here, your 50-day moving averages here. So even if we were to break this 1218 area, I would expect no more selling off, or I would expect us to sell off just to this 50-day and trend line. All right, so come in, bounce, start your move higher. Again, volume was higher, which is a bit of a concern, but ultimately when you step back and look at the grand scheme of things, we're really in consolidations right now. All right, we're still in these boxes. I think the only one that we're not is the S&P. If we go back to the S&P, I think, yeah, this one we actually broke down. All right, this one, the box is no longer intact, but support is there. Everything else, we're in consolidation. So again, it's nice to kind of take a minute, look back at where we are. Panic selling on Friday, oh my God, the world's coming to an end. And ultimately, when you kind of step back and look at it from a logical perspective, did it suck? Absolutely. But the fact is, we are just in consolidation. So when you look at the grand scheme of things, it kind of gives you a little bit of a peace of mind. Obviously, we probably all lost money unless you were short. We all lost money on Friday, but now it's a matter of, let's not make some rash decision. Let's not get net short now, because that's not going to help anybody. Let's just look at, where are we? Are we still in an uptrend? Yes. Are we consolidating? Yes. Is it possible that we break out again? Yes. All right. I don't see technical damage right now that says to me that, you know what, these lows are going to be violated and we're going to reverse. Now, whether we bounce right back higher, that's a different story. But ultimately, from looking at it, I just don't see the big sell-off in the future. But, you know, that could change. We start breaking below 50-day moving averages. We start breaking below these consolidations. Then absolutely things change. But going forward for now, I'd say trend is higher. And we're in a bit of a rest period, which is just fine after this breakout. So that's it for today's video. Again, hope you guys enjoy these videos. If you do, please leave a comment or question below. Let me know how much you enjoy them. Let me know your thoughts on where the markets are going. You could also be sure to check out the free download I have for the high probability setups. You can find that on the homepage. You can download that for free. And again, any other questions or comments, please leave them below. Have a great rest of the weekend, and we'll see you on Monday. Take care.